Welcome, everyone. My guest today is Peter Benjamin, president of ACUMA, the American Credit Union Mortgage Association, to talk about the challenges credit unions are facing right now in the mortgage space and what he's excited about for 2026. First, I want to thank our sponsor, Trust and Will, for making this episode possible. Peter, welcome to the podcast.
Sarah, thank you so much for having me. Long-time listener, first-time guest.
I love that. No, I'm so happy to have you. You know, I attended ACUMA's annual conference this year. Amazing. I loved it. We got to talk then, and I was like, let's get you on the podcast. And then, you know, it's just taken a while. So I'm so excited to now have you on. And now we can kind of do a retrospective of the year and like what you're looking forward to in 2026. This is going to be great.
That sounds perfect.
Okay, well, let's start here. Let's start with your particular members and what you think, you know, the biggest challenges right now are for them.
You know, that's tough because I don't want to get into rates because I know that you and Logan dive into rates quite often and where we're heading on the economy. You know, for me, it's more of the idea that, you know, a lot of our members or even potential members, credit unions in general, you know, they're at this intersection where they are facing liquidity issues or they're unsure whether or not mortgage remains a vital role within their lending institutions or their institutions in general. And so when you think about all the challenges that they face, I mean, it's volumes for the most part has been down as far as first mortgages go. You know, home equity has been up, yes, and a lot of our credit unions are still originating home equity. But the tough part is, okay, well, first mortgage is really the key to communities. Home equity, in my opinion, is not. And so getting them to remember that, you know, there's this fiduciary responsibility in the mission of a credit union to always support the communities that they serve. The best way to do that is through mortgage. And I think looking back, you know, that challenge has been there the past 3 years, especially because, you know, a lot of credit unions, when you think about 2020, 2021, you know, all they were really doing is portfolioing this 3% paper. You know, here we are, you know, almost 4 years later, and they're stuck. And so what do? We have to invest, we have to explore, we have to find ways to free up our balance sheets, or even start leveraging our balance sheets to originate those mortgages. And oftentimes credit unions are scared to do it because it's the unknown, you know, the unknown of, will we lose our members or we don't have the expertise in-house, you name it. I think that's the biggest challenge facing credit unions and what I've seen. And I honestly think it's going to probably continue for the next several years.
I think it's what struck me so much when I was at your conference is just the different calculus that you guys have, right? So if you're an independent mortgage banker, that's all you do. You don't get to be like, yeah, we're not going to do so many mortgages this year. Like, no. If you're a big depository, if you're a bank, and you just look at the bottom line, am I going to make money or am I not going to make money? Okay. You know, I'll make it on that. You guys are coming into it with this larger mission focus that is not just that. So I can see how that is it's more challenging in that way.
Yeah, and I think you hit it right. You know, we are very much mission focused, you know, dedicated to our communities. But you're right. When you come to our conference, you know, we talk, yes, how to originate. That's been the backbone and foundation for our conferences since it started in 96. The tough part is that we've had to evolve. We've had to bring on, you know, servicing content, you know, content strictly focused on home equity. Now we're getting requests to focus on, you know, the commercial side. You know, so and the commercial side is interesting because credit unions view commercial lending or residential commercial lending differently, or business lending. You know, for us, you know, in the mortgage industry, 1 to 4 family housing is residential all day long. You can originate that, sell it to Fannie Freddie with no problem whatsoever. For a credit union, that multifamily, that 2 to 4, has always lived on the commercial side or in business lending. But recently, that's being pushed back into residential mortgages, and our members, and although it just for you and me, it might make sense, and for the mortgage bankers that are out there listening, it might just make sense. But for credit unions, teaching them about multifamily is becoming more and more important. And that request continues to pop up. And how do we continue to expand our offerings and serve our members? Because let's be honest, 1 to 4 family is or 2 to 4 is they're great properties. A lot of our members are probably going to go down that path, rent out the other portions, get some income. It's interesting how we continue to evolve based off the needs of our members.
So talk a little bit about who are your members? What does that profile look like? Where are they? What kind of community are they in?
Good question. Good question. Our members are national. Like, we have credit unions, ranging from the DC area all the way up to Guam, or down to Guam. For us, we focus on any credit union that originates mortgage or home equity. That's our main focus. Right now, we have about 430 credit union members that range anywhere from the biggest of the big to ones that, on paper, you're actually shocked they're originating as much as they are, because they're so small and from a depository side. So it's our members are dedicated to mortgage. When you look at the top 500 originating credit unions, for a first mortgage standpoint, about 60% of them are members of ours. And so our goal right now is to really capture what 2,500 credit unions originate. Our goal is to ensure that every single one of those credit unions become a member. That way we can expand our community, expand our education, our network. But we also know that if we're hitting all 2,500 of those credit unions from our membership level, we're only improving our side of this ecosystem through education and collaboration.
Yeah, I love that you brought up education, some of those other focuses. I was really struck at your conference by advocacy and how much of that you guys do, and how you guys are making sure that your members are represented as you collaborate with other groups on mortgage and things that DC needs to know. Where would you say you guys focus this year?
That's tough, because I think we have a great relationship with other trade groups, NAMBA, Mortgage Bankers Association, America's Credit Union, the National Credit Union Association. We have great relationships with them. But for us, when you actually look at the efforts that we do, those efforts are more so geared upon trying to bring awareness to what a credit union is, and that credit unions fundamentally originate mortgages. We serve our communities, and that if a lawmaker has a question, that the best person to answer that question is going to be someone from a credit union, because we're entrenched in our communities. When I think about, things that I'm hoping to see, in 2026, I'm fascinated with, the Road to Housing Act. I think, that when the Senate banking passed it unanimously, and you kind of read through everything that they're trying to do with it, on paper, this seems like probably one of the first big things that could be a massive win for housing in several years. Obviously, the House, it's now with the House, and they are really looking at, how to put their thumbprint on it. But I think ultimately, if it maintains the spirit of what it currently is coming out of the Senate, I think credit unions, especially when you look at small dollar amount lending, really have the ability to positively impact their members, but also take a hard look at whether or not we can continue to push forward and invest in that mortgage originations. As far as I'm concerned, that's probably the biggest win I'm hoping comes out of 2026.
Really interesting. So 2025 has been a year of a lot of change, right? From that DC level. Obviously, the Trump administration ran on deregulation, and we have definitely seen some, basically taking an axe to the CFPB. Anytime we write about the CFPB, we have a picture of an axe cracking the building,
Yeah.
because to us, it's like, that's kind of like, that's not hyperbole. I mean, that is not hyperbole this year that's happened. And I think that many in mortgage would support that specifically because there had been so much overreach. But I have heard from others that are like, yes, definitely. But there is always the potential when you have that federal presence step back, that you have all 50 states step forward. And in some ways, you could be in a worse case. How do you see the deregulation around mortgage right now?
It's for credit unions, it's tough because oftentimes when you look at an individual credit union, and I'm not looking at the big guys, the ones that are 10 billion and above. They have been forced to build up their compliance controls. But when you look at the average credit union, the average credit union is less than 500 million in assets, right? Which means that they're probably originating 50 million a year, right? So comparatively speaking, small potatoes to what some of your listeners might originate. When you look at those credit unions, and even look at credit unions that are 3 billion in assets, originate half a billion a year, oftentimes compliance lives within the department. There's no compliance expertise within the compliance department. It's the compliance expert is the head of mortgage, head of operations, someone like that. And so to kind of go back to your question, for me, and having lived in that seat where I was, yes, the head of a mortgage division, I was also the head of compliance, that my division's compliance. And so anything that provides clarity and anything that makes my ability to comply with any type of regulations, I'm all for. I think that's what credit unions really ultimately need. Give us a clear, sound direction of the path that we need to take. And we're going to do it. We're going to remain compliant. We're going to always be a little bit more conservative in our underwriting processes, but give us, I don't want to say black and white, but almost black and white instructions of how we need to comply. I think that for me is the only thing that comes out of it. And I think you and I can agree on this, that you said it, the states are going to pick it up, right? And I agree. The states will pick this up. But also, what happens when a Democrat is back in office, right? You better believe that they're going to come back tenfold, rebuild the CPB. It's going to be regulation by enforcement all over again. And those people who really didn't follow that path of what's in Dodd-Frank and spirit are really going to be the ones that are going to be pushed out. And so for me, credit unions really just have to need that clarification. I'm not a compliance person. I know enough about compliance to be dangerous, but having the ability to know yes or no and not have to read between the lines is something I would ultimately want.
I just think that is so, it's so fundamental, and it's something it feels like they just don't understand. So, I was at HousingWire when Richard Cordray was very much like, he came out and said, so he used to, for people who don't know, he used to be the director of the CFPB. And he was like, if we give them black and white rules, they'll just figure out ways around it. So the way to go is just to do regulation by enforcement. So you never know what you're doing. Is it right or wrong? And then when they slap somebody's hand or slap a huge fine, you're like, okay, I have to take the right lessons out of that. And it's like so inefficient and crazy if you're running a business to try to figure that. It's like, literally just give me the black and white rules.
Right. And so I think back to, when they rolled out TRID, right? And the CPB would have all of the TRID webinars where it was supposed to be framed up as, this is how you originate a construction loan under TRID, right? Or something like that. This is how you read the LE. All they were doing at that time was reading the act and referencing Romanettes. And if I heard the word Romanet one more time, I was going to run through a brick wall because they weren't answering any questions. They were just, right. I could have just read that myself. half the time and save myself this hour of trying to understand how to originate construction loan through TRID. They in many ways, and this is me speaking, it's almost as though they purposely were vague in those trainings to kind of fall back on what you said. We'll just enforce this later down the line. So hopefully we don't see that again, but you never know.
You never know. Fingers crossed. Well, let's go back to that Road to Housing Act a little bit. What about that makes you optimistic that if that got through, we would all be better for that in the housing industry?
I mean, I think when it boils down to it, they did a very good job of providing a clear path for affordable housing, right? That low dollar amount, for my opinion, it was probably one of the biggest wins in that. Affordability is the biggest issue. We all know that. I mean, you talk about it quite often with Logan, and those low dollar amounts, anything under 200,000, are oftentimes caught up in that crossroads of, can we originate this compliantly and avoid any high cost tests, right? The fact that they provide clarification on that within, or the framework to allow someone to originate a low dollar amount loan within roads, I'm hoping provides better access for communities that actually have homes with that dollar amount to housing. I mean, that right there, and was something I was excited about because I saw credit unions truly stepping up to kind of fill that void on those smaller dollar amounts. Credit unions don't need to win on jumbo loans. We don't. We need to win on the everyday loan that our members face. And really, ultimately, it's going to be that 200 and under loan amount. That right there was the one thing that I liked a lot about it.
Interesting. And I would say that borrower is not somebody that a lot of people are chasing.
No, they're totally getting ignored. They're totally getting ignored. And if we truly are community-based institutions, we have a fiduciary responsibility to serve those members at $120,000 loan amount. That's how we win. Let's focus on the quantity and not so much, I don't want to say quality because that's bad, but let's focus on that quantity that will get us to that point of success.
Yeah, I just did a podcast. It'll air a little bit later with Freddie Mac about their cost of origination report, the survey they do. And, yes, okay, finally, it is a positive number, but it's just crazy how much work goes into making that amount of money. One of the things that they really point to is and we all know, is technology is supposed to deliver that efficiencies and help. When you look at the credit union space, what role does technology play for you guys?
Good question. I think you and I can also agree that when you look at technology as a whole, we're kind of sort of in this golden era of technology when it comes to the mortgage industry. But our industry is still 2 steps behind everyone else when it comes every other industry. Healthcare is a good example. Our industry's years behind them. Credit unions are probably years behind any other IMB or bank. I'm not saying every credit union, but a lot of credit unions out there are. I just wrote a white paper where I focused on the need to invest in mortgage, and part of that was the technology component of it. That the modern mortgage borrower is there, and that this idea of relationship building is great. Yes, a mortgage leads to a relationship, but today's borrower, today's member, wants everything at their fingertips, and so the credit unions that understand that have seen success and are able to grow their market share. The ones that aren't are really falling behind. Now, the tough part with technology is, like you said, there is always a cost associated with it. Regardless of whether or not technology is framed up as something that's going to provide improvement, there's that cost to enter that a lot of credit unions just can't afford to get into. So that's it's almost a double-edged sword when you think about it. They need this technology, but they can't afford to get it because it's their price out of the market. Some of them are going to, QSOs, which for us, QSOs are mortgage company owned organizations that we can leverage their technologies, but still not being able to afford it's not a reason to sit on that sideline. And that's all I'm going to say.
It is a really interesting conundrum because, say on the IMB side, what they're really struggling with right now, among other things, is that relationship based, getting the lead because, there's so much technology now that, and you have a lot of the bigger lenders who, if you think about Rocket and Mr. Cooper, like, they're getting to that person first. They know what's going on with their servicing and all that. They have a lot of technology on your side. I feel like you guys have the relationship. That is not the problem. You guys have the relationship, which to me is going to be key going forward because of all what I just said, because it's getting that lead, understanding where that person is to me, the differentiator going forward. And so in that way, even though maybe you don't have that technology, I feel like that relationship is going to do you well.
Oh, absolutely. Absolutely. But the relationship's only going to go so far because if we can't fulfill their needs, they're going to go someplace else. The number of times, when I was at Lafayette Federal Credit Union in the DC area, and I was their head of mortgage division for a long time, the number of times I picked up the phone and it was a member on the other line, and one of the first things that they said was, "My grandmother told me to come to you for a mortgage." Right, and that right there is the heart of credit unions and the relationships that we have with all of our members. The tough part is that, okay, well, grandma just referred this younger member over to us for a mortgage. If we are behind the times, or if we aren't able to allow them to go through this process how they want to go through this process, that they're already going to a competitor down the street. And I think that's one thing that credit unions often miss, is that we have to meet them where they want to be, not where we want them to be. It goes back to, it always grinds my gears whenever a loan officer would send just the application to the member, through our online portal, but then not walk them through it or walk them through the disclosures, because they think that's what the member wants. No, that's not what the member wants. They want to be handheld. Yes, they want technology, but they still want their hands to be held. So, I mean, that's probably one of my biggest concerns with credit unions, is that we have not invested enough in mortgage technology. You look on auto, you look on the consumer side, or even deposits, it's all there. It's that mortgage side that they're not really investing in.
When you look at 2026, what's your outlook?
I want to plead the fifth on that one.
Well, I thought about framing it. I was like, what are you excited about in 2026? I was like, well, no, let me ask you, like, are you excited about 2026? Yeah. What does it look like for you?
Yeah, I'm excited for it. I think that we have, when you look at the more credit unions and what we've done over the past year, I think our efforts over at ACUMA have really started moving the needle on credit unions, one, coming into the mortgage phase, but two, really growing our market share. You can look at recent HMDA data and to see that a lot of credit unions are starting to get into these home improvement type products. I'd like to relate that back to the education that we do over here at ACUMA, providing them that gateway to home improvements. So I'm excited that for the fact that our efforts continue to help our members, and it's seen in the numbers. I'm not going to quantify what I hope for next year, but if we can continue to take back market share, percentage by percentage every single year, I think that's what I'm pretty happy about.
No, that's a positive outlook, actually. And I know that Logan feels like, there is some business pickup to be had in 2026. No one thinks it's going to be a banner year that we're all going to look back on and be like, wow, but it's going to be better than we've had. And that's, I think everyone's happy about that.
Absolutely. Absolutely.
Peter, thank you so much for being on. It's been great to talk to you. I will have to have you on again regularly so we can keep up with your members and what's going on there. But thanks for being on.
Thank you, Sarah.